All right.
You just screenshot your ad so you can do other stuff.
Yeah. stuff for you.
Fine, I just made Brian co-host on the meeting, so you don't have to go through it for him.
Oh, sweet.
Yeah.
Okay, that's awesome.
This is April Bella.
Okay, thank you. Do you know what Patricia Hunts is? She's not in there.
Never heard
No.
that name before.
Okay.
Hi, Patty.
How are you?
Doing good. Welcome, welcome. Just gonna wait a couple more minutes, see if anyone else wants to come in.
Yeah, I got booted off it yesterday and I couldn't get back in.
That's weird.
That?
I said that's weird.
Yeah, it was. I was like, okay.
What was the class yesterday?
It was contracts, I think, like negotiating, doing contracts, once you've sold something. Well, what happened was Tim got on and we didn't have somebody doing lectures right away because they were late. So I kind of didn't get into it right away, and then I got. I can't really. But I think that's what it was, because first it was open house and then the next stage of.
Yeah, I think all of that, like you can get all of it on
Yeah,
online.
right.
Can
Yeah,
you see that? Can you
Yeah,
see that screen?
yeah, I can, yeah. The Ignite screen. I can only see
Yep.
the.
You can only see what?
I see the Ignite screen, but that's it.
Yeah,
Is that
that's
what
right.
you-
Yeah, so then if I do this, it changed?
Yeah.
Very good.
What is today's topic?
Today's topic is financial basics.
Okay.
So just some super simple stuff
Okay.
to go over, but valuable information nonetheless.
And then next week is the last week, I guess.
Yep. And that one's just like an overview of like tools that you have access to in the market setting.
Yeah, slowly but surely. Hey, do you know anything, Brian, about this was asked of me, and I'm not even sure what besides the information this friend wanted me to check on it, and I don't think it's something that's happening yet, but Bitcoin, using Bitcoin to purchase real estate.
Like just generally what it is, or like
Well, this friend of mine said he doesn't know if it's actually happening, if it's that common, but it's going to be in the near future, and he's got a lot of Bitcoin. He's kind of counting on the fact that he could maybe use his Bitcoin towards purchasing a home,
for sure. I mean,
So-
yeah, the
I know.
I'd be like I believe that it would become something that could happen just because the the prevalence and ownership of Bitcoin has gone up, but because it's such a volatile type of currency, I feel like using it to purchase a home is not something that would happen in the near future. But I think that would be, it could be agreed upon between the buyer and the seller, but I don't think it would become commonplace.
Yeah. Well, I told him, I said, he's not ready to do that, but he was like, you should get in that because he said it's going to be the future. Right.
I mean, Bitcoin's at what, like 50,000 right now?
Yeah.
So like, that'd be pretty surprising to just be able to buy a home for like, what, 40 Bitcoin?
Right. No, I think it's something.
On chance that
Yeah.
it helps somebody buy a house in Bitcoin.
Oh, I just heard that someone in our office actually did do a transaction with Bitcoin.
There you go.
Yeah.
Yeah, he said, why don't you get more into, I mean, he's really into it. He knows more about them. Like I said, I hardly know anything about it.
Yeah.
That's where he's put his money. Not all of it, but he's really counting on the fact that that's going to go. And I have a feeling he's not too far off. I mean, some really big people are purchasing Bitcoins.
Yeah, definitely.
So
It's still just like, it's a very like risky investment to do.
Mhm.
So at this point, even though it's getting more consistent. All right, well, I feel like I waited long enough. We can just go through this. And you can just let me know if you have any questions, since, it'll just be us. Okay, so yeah, this one we're going to be going over, just like I said, super basic financial stuff. The main focus of the class is pretty much just how you should not really manage your money, but how you should plan your year so that you can reach your financial goal, whatever that is, whatever your net profit goal is.
Right.
So it's really just like some simple math, and that's more or less what the entire topic's going to be. Just about how you can calculate what your profit will be at the end of the year. Okay. All right. So we'll get started. So this is one that I'm sure you've seen on all of the other Ignite classes. We're here at the final step, number 9, which is manage money. And then, have you been doing the, hold on one second. Sorry about that. So we're going to get into it, but first, have you done all the other Ignite classes?
I've done all but 2.
Oh, okay. How was it so far?
One yesterday, and then
the one that you got, unceremoniously removed from. How were the other ones though?
They were good. I mean, they're good. I mean, I like everybody that's giving us some practical advice as well as, I mean, it gets a bit didactic, and then they give you the practical advice, and you're like, that starts to break down into practical after a while.
Yeah.
So kind of where I'm at now.
Yeah, and then this is one, I think that we talked about this when you're being onboarded, but this is just another one that I find interesting. Is just that real estate agents, when they take their test, it's like contracts, it's very specific data. They don't teach you anything about like finances, right?
Yeah, and this is the thing that actually just was my being a freelancer to begin with. This is an area I'm like,
right. Right, but you're already familiar, it sounds like, with basically what's going on. So this is what they determine as the habits for financially sound business. So the number 1 is setting the profit goal. And that's just whatever you want to see as the amount that you have added to your savings at the end of the year. Then number 2, second most important thing, is how to estimate and save, including paying your taxes, which is going to be a focus later on in this class. And then this is talking about the chart of accounts that's in the Millionaire Real Estate book, which I'm sure you've heard a lot about over the Ignite classes. So there's a breakdown, and then that one, it's going through what you want for your cost of sale and what you want for your expenses, according to Gary Keller. So that's what that one's going to be. And then number 4, which is to review your financials on a monthly basis. That's just the same sort of thing of like being aware of where your business is, how much income you've received, how close you are to receiving that profit goal, that number 1 profit goal there. Paying yourself a salary, that's one that I think a lot of agents don't really think to do. because they, sometimes with newer agents, it's not with everybody. Sometimes with newer agents, they see the money that's coming in as their salary, right? And they're not thinking about the expenses, the other things that need to be handled first before they get a salary. So paying yourself a salary is a way to manage your finances as the year goes on, so that you give yourself a salary. And I always say to kind of undersell, undervalue yourself, so that you have that excess just in case your calculations are off when it comes to taxes or whatever else you have to pay. And then number 6, prepare now for a financially secure future. That's just about, like I've been saying, staying active, knowing what your finances are, and being able to reach that profit goal that you've set up for yourself. This is a classic quote from the man himself, Gary Keller. Money is good for the good it can do. I mean, so wise. Here we go. This is a breakdown of 2 different ways of handling your finances. So on the left here, you have the less ideal version. This is what I was talking about with the whole salary thing. And on the right, you have a more intricate and a more secure way of handling your finances. And this is, again, you should be able to access this through KWU, through KW Connect, just so that you can get a closer look at it in the future. So we'll just go through it briefly here. On the left, this is seeing a sold commission where they received $9,000. The agent's name is Jessica Campbell. Jessica Campbell receives $5,760 after their split with the Market Center. She puts it all into her bank account. She puts it all into her wallet. There, she doesn't have any savings. She doesn't have any tax savings. On the right is a more accurate version of what you should be doing, where you take that amount, you give yourself a split in your bank account. That's the third one, that little symbol there. Business bank account, $1,700. Personal bank account gets $4,000. And then that personal bank account is broken into 3 separate things, which is tax savings account, federal and state tax, which you have to pay per transaction, and then self-employment tax. So just all the different specifics. And this class, just to let you guys know, this class is more so just a general thing. For the specifics on the taxes, you're going to want to reach out to a CPA or someone who's more an expert in the actual tax breakdown. And there, Jessica, in this scenario, her wallet has $2,400, but she has secured a safe financial future for herself by allocating resources to taxes ahead of time. So this is, again, breaking it down just again. So $9,000 commission, net payment of $57 after the split with the Market Center, put $2,400 in your pocket after accounting for expenses and taxes. So that's the idea. You don't want to end up in a situation where it's the end of the year and you spend all of your income thinking of it as your own salary, and then the IRS is calling asking where the money is, and you're like, all of a sudden you got to scramble to just get caught up. So now we're going to go into what I mentioned earlier, which is the millionaire real estate agent, and the breakdown that Gary recommends for your finances. And this is going to be regarding cost of sales and operating expenses, which are 2 separate things. So here is a breakdown of the model. You see GCI, the amount that is written on your check, or no, that's the amount that after your 2.5% split, or however big your commission split is on the income, that's the 100%. 30% of that goes to the cost of sales, 30% goes to operating expenses, and then 40% is your net income or your profit. So add those all up, and they reach 100%. So I'm going to go into what the differences between cost of sales and operating expenses, but here's just sort of a visual for the model that, that Gary recommends when it comes to your finances. So here we're going to talk about the flow of money. So when it comes to your business, you know, you may have different goals, personal goals that you may think of, but what it all comes down to with your goals is that you want profit at the end. You want to receive profit. You want to be adding digits to your bank account. So the common formula that you see is you get income, you subtract expenses, and then you get profit. But if you want to do a different sort of breakdown, a more specific real estate related breakdown, you'll look at this one on the right, where you start with profit. What's your goal? What's your goal for the year? How much money do you want to add to your bank account? Then you go down to the first one, which is income, and you think about how many houses do I need to sell in order to get my net goal. And then you go to expenses, which is what are my expenses? What can I minimize in order to increase that profit? So you think about profit first, then you think about how many houses that's going to be, and then you think about the expenses, and maybe you need to add a few more houses once you calculate those as well. So we're going to start with thinking about income. These are just the standard ways you earn commission. And now we're going to go into the different expenses that I talked about, cost of sales versus actual expenses. So cost of sales in this scenario, being a real estate agent, cost of sales would be the split to the market center. So that is just, you know, when you do a transaction, that's the cost of sale, is that the market center gets a 30% split, standard split, plus the royalty fees have to get paid to Keller Williams International. So those are the main cost of sales. There's also splits that can be paid to employees or independent contractors. Sometimes these would be things like escrow fees. You know, if you have an assistant, if you have anything of that nature, and then also referral fees. So if you were referred it, the cut that would have to go to the other agent. Those are all parts of cost of sale. So that, you know, what's an important distinction, I think, between cost of sales and normal expenses is that when you have no transactions, you have no cost of sale, but you still have expenses that you have to cover. So those things would be things like, you know, if you pay the salary of an assistant or a TC, or if you have to buy like, you know, marketing material, those are all considered expenses, not cost of sale. So here we're going to just take a step back and go through cost of sales like I was talking about. This is we're just going to go through an example here on how to calculate these things. So if you guys have your participant guide open, this is on page 9. Otherwise, it's all right. You'll be able to follow along just fine. So there's going to be 3 separate formulas that you'll see on that page, and we're going to show them slowly here. So this first one is talking about the split. So this is the 30% split. You can see GCI minus company dollar, which is GCI times 30%. And then you subtract again royalty, which is GCI times 6%. And that leads to your net commission. So in a situation where you've already capped on royalty, but have not capped on company dollar, this one here, this formula is if you capped, but you didn't cap on royalty. So that's what you're looking at here, GCI minus royalty. So knowing specifically where you are, again, like I was saying, being aware of your financials, knowing where you're at in terms of your cap, in terms of things of that nature, that's what you want to be focusing on when you do these formulas. So then this is the last one. You've capped on both. What is the net commission check you will receive after company dollar? And that is essentially just your GCI and then minus, there's the normal deductions, which is in our office, it's the risk fee of $199 and it's city tax. So those are standard things that get taken out on every transaction. So your GCI, if it's 30% split, we'll say that you have a GCI of 10,000. 30% split, that's 3,000. 6% split, that's what? That's 600. So that would leave you with 6,400. And in the third one, well, it would leave you with 6,400. Then you have to subtract the 199 and the city tax. So that would be, it would be around 6,000. You capped on both, then it's just that $10,000 minus the $200 and minus city tax, and that's your cap, or that's your income that you receive. That's your check. So that would be, around 9.5, something like that. And just if you guys want to know, city tax is 0.425% of your transaction. So it's not that big, but when you have bigger checks, I mean, it can be a couple $100. But for most people, when they do, something smaller like that, like if you have the $10,000 thing, I mean, that's like a $4, right? Is that right? Am I doing my math right there? Times 0.00425. Oh, it's $42. Okay. So that's about where it is. Okay. Any questions so far? Anybody?
That's not including your coaching.
What's up?
Well, it's not exactly related to this. Do we have to pay E&O insurance? Your errors
That's
and
what I'm talking
omissions?
about when I say the risk. So we call that risk in our office, but that is both the E&O and the lawyer fee. So in Larchmont, you get access to a lawyer on every transaction that you do, even if it's a referral, even if you haven't, entered into closing, anything like that, you have access to our lawyer who can help with any legal questions. His name is Peter Haven. If you need his contact information, just let me know after. But yeah, so it's a $200 total. So 100 goes to E&O and then 99 goes to the lawyer fee. So it's covering you for any sort of, any sort of legal issue, any sort of risk is covered by that fee. That's what that is.
So we pay that because one of our agents, we were talking about it last night. We don't have to, we pay that with each transaction. We don't have to pay it
Right.
like per year or anything.
It's not a monthly fee, it's a per transaction fee.
Okay, thank you.
Okay, so now we're going to be talking about what this class started with, which was coming up with your goals for the year. So this one is, they describe it as an activity to come up with your profit goal, but we're going to just go to the examples so that you guys can see what the whole plan is. And then there's a breakdown in the next slides that will help with the calculations here. So this is just going to be a breakdown of the formula, but we're going to go through each one by one. So in this, we're going to say what if your net profit goal, we're going to set as $100,000. So in order to calculate for taxes, you want to divide that goal by 60%. So the reason why you do that is because a good safe estimate for taxes is 40%. So if you take that second number there, that 166,000, multiply it by 40%, the remainder is 100,000. So that's what's going on in that situation. So that's the first thing you want to think of with your net profit goal, because you're taxed on your income after you go through these other steps that we're going to get to. So gross commission income is achieved by dividing that 166,000 by 40%. And that is going back to what we talked about before, the 30% for 30% cost of sales, 30% to expenses. So that's what's going on there. You divide it by 40% because if you take that 416,000 and take 60% of it, the remainder is that 166,000. So this is a good way of thinking about how, like what your gross commission income, what you want your gross commission income to be in order to reach a net profit. So this is sort of a breakdown of that. And then after that, you can start thinking about how many homes that's equivalent to. So for, in this example, it's a $7.5 thousand average commission. It would take 56 homes with that commission to reach 416,000. You get rid of the expenses and the cost of sale, you end up with 166. Get rid of taxes, you're left with the net of 100,000. And then this goes into what your, this is cost of sale and this is expenses. So it doesn't always make it clean 30 and 30. It can be different depending on where you are. In this example, the cap is 23,000. In our office, it's 29,000 plus 6,000 for royalties, so it's 35. And then the operating expenses budget for this example is about 125,000 for, and this is when you want to reach that 100,000 profit goal. So, you know, in this situation, 56 homes, that's a lot to deal with. Part of these expenses could be things like paying for an assistant to administrate, to deal with things so that you can focus on getting deals. It can be things like marketing expenses. It can be, you know, anything like that. It can also include stuff like, well, you know, it's mainly those two things is what I can think of off the top of my head. Next up, we're going to move into best practices. I just wanted to see if you guys had any questions about this screen. Everybody good? Very good. We're going to go into the best practices. So this is another one that I think you guys have probably seen before, maybe not, but this one is breaking down what we see, what the Millionaire Real Estate Agent book sees as the best practices that you want to be fiscally sound and responsible. This is on page 11 of your participant guide. And they want me to note that this list is not exhaustive. So there could be more things that you find that are missing, which would be great if you would, you know, if you think of something, let us know, because the others would also be interested in learning that. So going through, first of all, some introspective, gain clarity on your hopes and dreams. So that's like, what do you want this net profit to lead to? Why are you going after this money? Why did you choose this as your career path? What about it to get you focused, to get you driven on those goals so that you can stay focused? And then next up, set up personal and business budgets. So that's not only, you know, like I was saying, the administrative fee, but that's also things that you have to deal with. So things like your car insurance, your health insurance, your mortgage, whatever it is. Set up a business entity. So this one, we'd recommend, this is another one where it's like, if you want to go into it, you're going to want to reach out to a tax expert or, you know, someone with more expertise in setting up a DBA. So doing business as, or a corporation, however you want to do it. It's usually a good way because it not only will change how you do your taxes, but it'll also allow you to separate your accounts. So if you have more than one job, it would separate those two. So it would be everything that you get from real estate is going into your business bank account. Everything you're doing, if you have a second job, would be going into your personal account, or things if you have like, you know, if you have a stock portfolio collecting dividends, those would go into a personal account, and you'd have a business account to track so that you'd be able to pay your taxes better at the end of the year, or, you know, in April. And then they recommend having an additional bank account for taxes, expenses, and other savings. So just having a breakdown of all these things so that you keep your income separate from all of the expenses that you have to do. Download and use the chart of accounts. This is what we were talking about before. This was the 100% net income, 30% cost of sales, 30% expenses, 40% profit. So that's what they want you to focus on. See that with your actual numbers is always important. Download accounting software. You know, this is some standard advice if you're going to be doing your own taxes. It's a very important way to keep track of your expenses and your income. Then in addition, hire an accountant or a CPA or an attorney. Like I said, we have an attorney for matters that are dealing with your transactions, but if there's something outside of that, it's good to have an attorney specifically for things like if there's an audit from the IRS or something, it's good to have someone who's an expert on that to really not only have to be able to use their expertise, but to also free up your time so that you can focus on doing your business. And then, you know, setting dates to calculate and pay your estimated taxes. That's another standard one where you should be following a schedule. You should have a calendar for the year. This is stuff you guys are already doing, I'm sure, as a real estate agent, to just be, you know, looking at your real estate business like it's a real business, so that you've got time locked in for, you know, this month I'm going to pay my taxes. So working backwards from there, when do I need to know how much I need to have in my savings account? When do I need to know how everything is broken down? And then same deal with the last one there, prepare for your future with your insurance, savings, investments, all of that sort of stuff. So that's just goes back to what I mentioned before of being aware of where you are with your finances, where you are with your business.
Can I ask a question?
Absolutely.
It said on the last slide, it said insurance. Is that, what do they specifically mean by insurance for?
So that would just be like car insurance, health insurance, anything else. Yeah. Yeah. Okay, and now we're going to go forward. This is now, at this point, we're kind of going away from finances and more into just general good habits. So these are things that you guys have probably touched on in previous classes. So this is mainly a refresher, which is, here we go. The goals to set your career on fire. So this is not daily. This depends on your business. This is just an example because it really depends on your database. It depends on how long you've been a realtor. It depends on how big your sphere of influence is, how many previous clients you've worked with. These are all sorts of things that vary depending on where you are in your business and where it is compared to the rest of the region that you're working. So it will vary, and it is important that you are aware of these things. A way that you can do that, there's tracking software that's on, I believe KW Command has it, though I'm not sure how reliable that specific function of command is. But even outside of that, you can be keeping track of these sorts of things just on your own, because it's important to know how many contacts you're doing, how many appointments you're going on, and how many houses went into escrow. Because from there, you can work backwards and you can find out, okay, so it takes me on average 3 appointments to get a listing, and it took me, I don't know, 300 contacts to get 1 appointment. So then that would be, you know, it would take 300 contacts to get 1 appointment, or to get 3 appointments to get a listing. So then it would mean 300 contacts equals 1 listing. How many people am I contacting every day? So if you know it takes me 300 to get a listing, then that means you would want to hit 300 in a month, say. So that does break down to 10 contacts a day. So 10 people called, 10 people told that you're looking for people to people ready to sell their home, and then moving forward from there. So that is just a good practice, if you're not doing it already, to get into, because being aware of your numbers and your activity is very important to reaching those net profit goals at the end. And I mean, with that, that does pretty much wrap up today's lesson. So now I just want to see if you guys had any other questions, anything at all. I can answer the best as I can, but like I said, you know, specific tax related questions, those are better for a CPA or someone else. All right. Well, I am in that case. Hope you guys enjoyed.
Yeah, thanks.
Hope you guys learned a lot. Let me know if you guys need any links, any you know, any of this material is all available on KW Connect, but I can help direct you if you need.
Thank you. Appreciate it. Thank you.
Brian, would it be okay if I maybe have a referral or a person in the office who we talked about the Bitcoin that maybe, would they be available to ask a question about that or?
They're not active in the office.
Gotcha.
No, it was from about a year or two ago. Yeah.
Okay.
All right. Thanks, guys.
Thank you.
Thanks.